Good afternoon, good evening, and good morning to everyone. Actually, we want to first give our thanks to the Council for actually creating this framework. So we see value in it because, for example, the Philippines only accounts for 0.3% of global carbon emissions. Yet when we did our nationally determined contribution, our first submission, we had to employ a whole of government approach wherein we had to ask each sector of what is doable in terms of commitment. And when we came up with a 75% reduction from our 0.3% global carbon emission, from our point of view, it was already ambitious because most of our people, for example, those with highly vulnerable, like farmers, fisher folks, they don't really understand climate change yet. And we can't transition them right away. So it's a phasing mechanism. But then from your non-government organization's point of view or other people, this ambition might seem not to be too ambitious. So for them, we're not being ambitious enough. So I think the sustainable finance integrity framework is actually useful as a metrics in terms of measuring how developing countries' ambitions and what we have been doing is relatively ambitious in the context of our own economic development progress. So, for example, if you compare, let's say, the UK or France, of course, they have already announced net zero timelines. But then for us, you can't really compare our economy with theirs and say that our ambition is less ambitious. Because again, our development needs is very far different from theirs. And that in our context, for example, how we see the integrity of commitments is really important. Let's say when we committed to the Coalition of Finance Ministers, we agreed to implement the Helsinki principles initiated by Finland. But then how much of these principles have we actually implemented? How do we measure our commitment in terms of these principles? In the same vein that when our central bank, our SEC, and all our other private banks try to commit to sustainability and mainstreaming of climate finance, how do we know that they're doing the minimum or they're actually reaching far ahead of what they can actually do? So this is where we think that the principles are actually, the framework is actually important. It is really to provide measurement, especially in terms of the COP coming this November in Glasgow, since we have developing countries pledge support, for example. What we want to see are actual financial instruments that are usable by financial sectors, not just funds that give grants. Although these are good intentions, we actually need measurable instruments that we can use. So I think this is where the framework comes into play. So thank you.
Thank you so much.